Thank you, everybody, for joining us today. It's a lovely Tuesday here in Phoenix, Arizona. My name is Nate Hare. I'm the Vice President of Sales and Strategic Relationships at Directed IRA, and I got a very, very special guest, her first time on the program, Lindsey Mursi. Introduce yourself to the world, Lindsey. Tell them who you are.
Everybody, I'm Lindsey Mursi. I'm the Executive Director of Operations here at Directed Trust Company. Been in the world of self-directed IRAs for, how many years? It's how many ever years you're in the business, plus one extra year.
She will tell you, yes. We are both veterans in the industry. I will say that, but she will always remind me that she's got 1 year of tenure above mine. So in front of you right now, we've got about 27 years of self-directed IRA experience, and that may make us seem really, really old, but this is something
only you.
Okay. Well, this is something we really enjoy doing, and we welcome you guys to the program. And we'll talk a little bit about, who we are as a company, what Directed IRA does for people that have old IRAs, old 401ks, and they're just tired of the ups and downs of the stock market. What is the service we provide to you as a client of Directed IRA? And we're going to talk a little bit about just retirement accounts in general. What can they be invested in? What are some things that you may not have known about retirement accounts in general? And then we have a very, very special guest who has been working with self-directed IRA clients for decades as well. They provide a service for, investors that are looking for access to deals, specifically when it comes to real estate, specifically when it comes to turnkey real estate, which is a little bit different piece of real estate, which we'll dive into. And that's going to be Josh Gilmore, our good friend, and we'll bring him on in a short second. So before we get into the program, though, and before we get into the nuts and bolts, we have some special announcements, do we not?
Yes, we do. So we're actually hosting our Alternative Asset Summit here in Scottsdale, Arizona in October of this year. So October 16th and 17th, come on down to Scottsdale. There's also virtual options. Yours truly will actually be virtually emceeing the event. So any virtual attendees, you'll be with me all day. But come on down. We'd love to have you. We're going to be hosting it over at the Hilton Scottsdale Resort, and we'd love to have you live.
And I will tell you, one of the things that makes self-directed IRAs fun, but also a little bit of a necessity, I would say, is when you finally learn that you can take a retirement account, invest in almost anything, it's exciting. The thing that prevents people from self-directing, though, is knowing what to invest in, having the experience to invest in things off of Wall Street. And we're talking things like not even just real estate, but real estate, mineral rights, oil and gas, cryptocurrency, angel investing, private lending. There is a whole world of what we call alternative investments available to you out there. We just don't learn it in school.
Yeah, I got to say, in my 13 years of doing this, that's the number one reason why people pause and don't move forward with self-directing, is because when we tell them you can invest in what you know, which is alternative assets, the list is endless. So it can certainly be overwhelming. So hopefully we'll remove some of that for you today.
Yeah. And one of the ways that we bring people together, because one of the things you'll learn from Directed IRA is we are a custodian of retirement accounts, but we don't sell investments. So we're a little bit different than your Fidelities or your Charles Schwabs. When you have a retirement account with us, it's still a retirement account. It's still an IRA. It's still a Roth. It's still an HSA, but you have to tell us what the investment's going to be. Now, that may be a little bit daunting for some people. So what we try to do, and we do this once a year, is we put on our biggest event of the year called the Alternative Asset Summit. It's a 2.5-day event where we bring in speakers from all across the country, and these speakers are not allowed to sell investments. But we're going to be providing 2.5 days of education about different alternative investment opportunities, about different alternative investment strategies. And one of the things that this brings forth to you is the ability to network, not only with the speakers, not only with Directed IRA staff, not only with the sponsors, but other self-directed IRA investors. And we anticipate we'll have probably 350 investors. A lot of them are Directed IRA clients already. So we have early bird pricing up until the end of this month.
I thought we were ending it on the 16th, but maybe we can convince them to run it through the end of the month.
Yeah, you got even less time than I thought. So $100 off any ticket. So that's GA ticket, GA plus tickets. We've got VIP tickets. So get your tickets before that early bird special runs out, and make sure that you're here. Now, she said virtual is good, but You miss out on the networking, I will say, if you don't have a live ticket, and live tickets sell fast. In fact, VIP tickets sell out faster than any of them, believe it or not. So this is an event with high pH level of investors. You definitely want to be there. Scan that QR code or go to altassetsummit.com and grab your tickets before early bird expires. So anything else you want to say on the event?
You nailed it, Nate. We're going to have over 300 people there in the room with us, like-minded people just like you who are looking to get off Wall Street. So join us.
Yeah, join us. Okay, so let's get into it. And what we want to do is we have a lot of people who are new. I know we got about 60 or 70% of our viewers on a webinar are usually people that are just trying to learn, just trying to grasp what this self-directed IRA concept is. They may have heard about it from a friend. They may have seen it online. Maybe they saw some of our social media. Maybe they saw, a YouTube video with Matt, Sorensen or Mark Kohler, right? But they really don't understand what it is because nobody teaches this. So when we get into this, I'm going to talk just a little bit about what is a self-directed IRA? What does that even mean? What types of IRAs or retirement accounts can be self-directed once we define it?
Spoiler, all of them.
All of them. And then we're going to bring in our special guest to talk about how they help self-directed IRA investors basically get real estate investments or tangible investments, whatever you want to call it, turnkey investments inside of a tax-free account like a self-directed IRA. But as we educate, as a reminder, as I mentioned earlier, we do not sell investments to our clients. We don't give tax, legal, or investment advice. What we do at Directed IRA is we provide a service. The service to you is we act as your custodian of your retirement assets when you want to own alternative assets. Okay. Now, what are those alternative assets? What does that word even mean? Well, if you look at most custodians like a Fidelity or a Charles Schwab, right? This is what we're familiar with. This is where 97% of America's retirement accounts are held with the big guys, the brokerage firms, the companies that sell investments. So when you have, let's say, a 401k or you've rolled your 401k to an IRA or you've got a Roth IRA and it's at one of these companies, remember, they're a custodian of your retirement assets, but they also are selling investments. They're selling financial product. So the only investments they will hold in your retirement account with them are the things that they sell. Stocks, bonds, mutual funds, CDs, things that they make commission on. Most people think, well, that's my only option. If that's all I'm ever shown, maybe that's all the things my IRA can own. Truth be told, tax law allows you to hold any investment inside of a retirement account, provided you work through a custodian like Fidelity or Directed IRA. And there's only two investments the IRS doesn't want in an IRA or a 401k, and that's life insurance contracts and collectibles. That's it. The tax.
So no stamp collection? I know you've got
No
a really big
stamp
one
connects.
built up.
Yep. No, no stamp collections, no beanie babies. Your baseball cards don't fit in there. Sorry. There are some certain precious metals that can be held, some certain gold bullion, silver bullion, and things like that. But it's specifically defined in the tax code, the things that they don't want. Classic cars, antique rugs,
Tequila collection.
alcoholic beverage collections, because they know that'll turn into an empty bottle collection at some point.
Oh, that was a good one.
Yeah.
Never
So
that one.
I know I stole that from Matt Sorensen, by the way. But as far as anything outside of that, as a general rule of thumb, if you could drop a purchase contract to buy something, your IRA can be the buyer. If you could drop title to own something, your IRA can be the owner. You just have to work through a company that will buy the investment on your IRA's behalf and sell the investment on your IRA's behalf. So what we do at Directed IRA is similar to Fidelity. We hold investments, but we don't sell the investment to you. So our account agreement with our client, when you have an IRA or a 401k with us, is we'll hold anything the IRS allows, but you got to tell us what the investment is. And when we have an open-ended agreement like that, you can invest in all sorts of things outside of Wall Street publicly traded assets. And a spoiler alert, how many IRAs are you allowed to have?
As many as you want.
As many as you want. You don't have to have one IRA. In fact, most of our clients, and I would assume Lindsay agrees with me, have an IRA, directed IRA that holds their alt assets, and they have an IRA at Fidelity that holds their traditional assets.
Yeah, the traditional assets are also known as boring assets. So.
They're boring because a lot of times they make money slowly, which is great for a retirement account, especially if you've got a little bit of time. But if you think about real estate, and we're going to talk a little bit more about real estate as we go on here, real estate's a great investment. I'm not pitching real estate as a specific investment, but when you think about things like real estate, it's an asset that appreciates over time. It's also an asset that can cash flow, whether you're renting that property out. When you think of the income that's derived from that type of investment, when you own it personally, you have to pay taxes on that income. Now, I understand you can use some depreciation and there's some tax offset there, but you're always going to have to navigate through you being a taxpayer when you own real estate personally. When you own an investment in an IRA or a 401k, by definition, those accounts are not people. They're not taxpayers. In fact, they're by definition tax-exempt trusts. You're just the fiduciary to that trust. You're the fiduciary to your 401k. You're the fiduciary to your traditional IRA. You're the fiduciary to your Roth IRA. Your job to your accounts is to make a contribution, to invest it, and the IRS says, we won't tax any of the gains provided the investment stays inside the retirement account until you take a distribution. No taxes on the gains applies to whether you're buying or selling stock or buying or selling real estate. It does not matter. The IRA is tax exempt. Now, there are certain IRAs that when you take a distribution, you pay tax because you're the taxpayer, but the IRA doesn't pay a tax. So if you look at the types of accounts that you can self-direct, even though we call them self-directed, really an IRA is an IRA is an IRA. The 6 accounts you can have here at Directed IRA that can invest in real estate or own alternative investments are these 6 right here. If you take one screenshot of one slide, take a screenshot of this, because this is where you save in taxes. This is where you get Uncle Sam off your back. Okay. We've got 3 categories of plans that can be self-directed. You have personal plans, which are your personal IRAs, your individual IRAs, which are your traditional IRA, which is normally your pre-tax IRA. Sometimes people call it a rollover IRA. Or we have the mighty, what we love here,
the
Roth IRA.
Rollover IRA, that's the same as the traditional IRA, right?
In most cases, yes.
Okay.
When people say rollover IRA, what they usually mean is I rolled this money from a 401k, and most of the time your 401k is pre-tax. So when that rolls into an IRA, when you leave that job, it rolls into, by default, a traditional IRA. Now, traditional Roth, they're just taxed differently. They're still individual IRAs, but one's taxed on the way out. One's taxed on the way in, right? Yep. I will say, as you listen to some of our programs, we're big fanatics about the Roth IRA, and it's probably twofold. One is, if you're somebody that could take a small amount of money and make it larger, wouldn't you want to pay taxes on the smaller bucket versus the larger bucket?
You want to pay taxes on the seed versus the harvest. Absolutely.
Right. So, and when you're looking at real estate investments, again, when we're talking about multiple streams of income and high yields, well, wouldn't you want to have those investments that have multiple streams of income come to an account like a Roth where you don't have to pay taxes on the distributions as it grows?
You got me thinking, Nate, because I bought a house not using my IRA in
shame on you.
for about $200,000 in Vegas, believe it or not. And it appraised at more than $400,000 recently. So you're saying that I could have made $200,000 tax-free if I would have used my Roth IRA?
Tax-free if you would have used your Roth IRA. Now, there is a catch to that, okay? And you know this, and I know you're setting it up for it. Any investment that is owned by your IRA has to be an investment property, right? So if you're living in it, it can't be owned by your IRA. But any rental property, whether that's single family, 1 to 4 units, multifamily, syndications, short-term rentals, long-term rentals, mid-term rentals, private lending, all of those investments, as long as it's an investment property or for investment purposes, can be owned in an IRA or a self-directed IRA here at Directed IRA. But again, it's all about getting Uncle Sam off our back when it comes to taxation. So those would be your personal plans. Those can be self-directed. You can also self-direct employer plans. If you are self-employed, you can make contributions to a self-directed SEP. You can make massive contributions to a self-directed 401k. And yes, those plans can also invest directly into real estate. Okay, we'll talk a little bit about the process about that, but these are the 6 plans that we have here at Directed IRA that can be invested in real estate that pay no taxes. And then I love talking about these. You probably won't hear anyone talk about it more than I do. I don't know why I love them so much, but they're just the non-retirement plans that can be self-directed, because this is beneficial to anybody who's got kids, grandkids, or health expenses. And I hate to break it to you guys, every one of you has health expenses at some point. So, a lot of people think, well, I'm too young to start a retirement account, or I'm too old to start self-directing. Well, do you have kids? Do you have grandkids? Do you have healthcare needs? There's also plans that can be self-directed, that can be invested, that can be used. The profit realized in those accounts can be used tax-free to pay for qualified education expenses for your kids or your grandkids, qualified health expenses for you, your spouse, your dependents, right? All the things that you're reaching in your back pocket to pay for with after-tax dollars, guess what? Those can be paid for with tax-free dollars if you understand how to self-direct a health savings account or an education savings account. Now, we've got other classes that teach more specific on these plans, but just realize there's plans that can be self-directed to feed your retirement, where we can put real estate in there as an asset. We can let it grow tax-free, and we can also have plans that are invested into real estate that also allow us to pay for today's needs and today's expenses. So it might all sound great, right? This sounds all cool. It's too good to be true. Nate, this sounds almost illegal. I can buy real estate and pay no taxes.
How many times I've heard that in my 13 years? Is this legal? Yeah.
That's the why I got into the business. Is I thought it was illegal when I heard about it, and I was mad that nobody else told me about it until I learned about it. So 13 years ago, I jumped into the business, and I just find passion in teaching more people about this, because I wish they teach us about it in school. But I will tell you, okay, the biggest thing that prevents people from getting off the fence and investing in alternatives is one thing. They don't know what to invest in. They love it. They want to get out of the stock market. They hate that roller coaster, but they don't know what to invest in, or they know they want to invest in real estate. They don't have access to deals. We've got 20,000 clients.
21,000.
21,000 clients. I will tell you, out of the 21,000 clients we have at Directed IRA, maybe 5% of them are active investors and active deal finders. The other 95% of our clients still work 9-to-5 jobs. So where do they have the time to invest in real estate? They leverage the experience of somebody else. And that's why we have Josh Gilmore with SDIRA Wealth to come and talk about their experience in the market, their experience with real estate, and how they've come to help self-directed IRA investors find real estate. And not only find real estate, help them get real estate to a point to where it's considered turnkey. So I'll let you introduce Josh, and I'm so excited to have Josh on the program.
Absolutely. So a little bit more about SDIRA Wealth, who's going to be our guest today. SDIRA Wealth was actually founded in 2001. Yes, before the 2008 crash. So they've been doing this a long time, but their overall mission is just simply to help others create financial freedom. They primarily do that through turnkey real estate investments, and they develop over 2,000 properties per year. That's crazy. In 2022, they also actually surpassed 2 billion in sales of real estate. So they kind of know what they're doing.
Very active.
Yes. And today we've got Josh Gilmore. He's a senior VP with SDIRA Wealth. He personally has over 12 years of experience in the real estate investing side of business. And we're really excited today to pick his brain and hear more about how he helps everyday investors ultimately find financial stability now and in retirement. So take it away, Josh. Welcome.
Thank you so much. So glad to be here. It's been so fun throughout the years using my own self-directed IRA and going to these events and just improving the strategies we can offer clients. Really excited today to share with y'all a little bit about what we do here at SDIRA Wealth and how we can help.
Before you get too far, Josh, I just want to tell people, if you guys have questions, type those questions into the Q&A box. We've got 2 boxes, Q&A, and we've got chat. Leave the chat to network. You can say, hey, I'm so-and-so from Virginia or whatnot. Leave that for networking. But if you have specific questions that you want us or Josh to address, throw those in the Q&A box, and we'll either get that live or we'll get it at the end. Sorry for that, Josh. Just wanted to make that quick announcement.
No, all good, all good. And I appreciate it. And that'll help us keep organized and make sure we can get as many questions answered in this hour as we can. So a little bit about our company. People see SDIRA Wealth and they think, oh, self-directed IRA. It's actually a play on the words because it's strategically diversified in real assets. And a good amount of clients do this with their IRA, where they can use their IRA to invest and own rental properties they actually own. So exactly what we're talking about is the strategies they don't teach you in school, the things that you're not going to hear from your Fidelity, your Charles Schwab, your Merrill Lynch. And the sad reality of the retirement space is the average American only retires with about 250,000 in their 401k. So if you're conservatively taking out 4% of that a year, that's only $8,000 per year, which breaks out to $667 a month. And if Social Security is even around when you retire, average Social Security is only $1,900. So that puts you at $2,567 per month in your retirement. I know for me and the vast majority of Americans, that's just nowhere near enough income to retire comfortably. The good news is you and I aren't most Americans. We're here. We're learning about these alternative strategies. You're not going to hear from the brick and mortar firms, the brokerages that want you to buy stocks, bonds, or mutual funds, that medium risk, high risk, low risk. We're learning about these alternatives. And ultimately, this is about getting educated on the best route for you personally. So what we do as a company, we are a full service build to rent solution for investors who want to invest in real estate without having to do it all themselves. So I'm Josh Gilmore, now going on my 13th year. I'm the senior vice president, as well as a real estate investor, buy and hold real estate investor. I have the honor of helping clients achieve financial freedom, helping them do that inside and outside of an IRA. And our company, SDIRA Wealth, we're rebels. We challenge the status quo of only stocks, bonds, mutual funds. We're experienced professional investors, over 24 years in business now. We have over 30 years combined experience. And if you can't tell from my voice, I'm passionate about it. I loved helping so many people last year start this that avoided the correction that set people back so far back when they had only stock market investments. And when people ask what you're investing in and what does full service mean, it's a level above turnkey. And what I mean by that is we not only build brand new homes from the ground up, so it's all brand new construction. We research the markets we invest in. We've been in over 50 different cities over our history. So we're always looking for the best market to invest in with low risk, high job growth, business friendly laws that protect us as investors. We also have a lending team. So we're able to secure financing, including non-recourse financing, which is the only way to leverage your IRA and purchase more assets than what your cash is. And then when it comes to property management, we're not a property manager, but working with us, when we go to these markets, we vet and find the best managers in the area. And you aren't required to use our managers, but it makes the process of vetting a manager easier when we can give you a list of ones we've worked with.
Can I stop you for a sec, Josh? I just want to make sure people caught that. So, one of the things that we didn't have time to talk on, but good thing Josh brought it up, is when you invest in real estate specifically with your IRA does not have to have all cash. Your IRA can actually leverage bank financing. That blew my mind coming from the mortgage industry. I did not know that there were loan programs out there for retirement accounts. I thought you had to have a FICO score, you had to have tax returns, verifiable income. They had to get your firstborn, your blood sample before anybody would give you any money to buy real estate. Well, an IRA is a trust. It's a tax exempt trust. An IRA can also borrow money. A 401k can also borrow money. So are you telling me, Josh, you guys also have the leveraging solution for them as well? If they don't have enough cash in the IRA, or they want to buy 3 properties instead of 1 all cash, they can buy 3 with some debt on there?
Absolutely, Nate, 100%. And
okay.
If you think I've got a great slide for it, which will put it in perspective, but it's the only asset you can have that you leverage on in an IRA, where they're going to put financing on it based on the income the property makes.
Okay. So I just want to make sure people caught that, because that's huge, because it's not every day you get to own something in a retirement account and leverage other money outside of your retirement account to buy a bigger asset. So that's awesome, Josh. I'm glad you brought that up.
Absolutely. And then when we're looking at like the types of homes we're building, obviously brand new construction designed with investors in mind. So we're doing things that are very intentional to minimize maintenance, like not putting lawns in Texas where we don't have to replace sod. You have lower landscaping costs, doing artificial turf. It's easier to rent. It's lower risk because all the homes have warranties, and there's some bonus depreciation options as well when you're doing a brand new home. And when it comes to market research, we spend 2+ years researching a market before we break ground and start building homes there. And over 30 key indicators we use and share with our clients to help them make an informed, educated decision. Major employers, cost of living, average occupancy being low, strong job growth, strong, stable employment like college and healthcare are things that we love. And to touch on the financing, we have over 300 preferred lenders we work with and an in-house lending team. So we can get all different types of financing, including special rates on non-recourse financing, which is the only way to leverage an IRA. And you
so
think,
hold on there, Josh. So you're saying that we cannot use a traditional mortgage, right? Like you would on a normal primary residence?
great place to stop me. Absolutely not. Because technically, if you're buying a property that's tied to your credit line, correct me if I'm wrong, that's providing a service to your IRA, which is a prohibited transaction.
Yes,
Right.
it's an extension of credit to your IRA, which you cannot do.
Now, this is also a good thing. People think like, oh, well, what do you mean I can't get a loan? Do you really want another loan on your credit report to begin with? An IRA can get a loan, and correct me if I'm wrong, and I'm not sure how your lenders are doing it, but in my experience, all a lender wants to see if they're going to loan to an IRA is a lot of times they want to see the property first. Like, tell us where the property is so that we can see what rents in the area are, because they run it usually like a DSCR loan, like a debt service coverage ratio loan, if anyone's familiar with that. DSCR loans don't take into effect a FICO score. They don't ask for a tax return. They just look to have the buyer, which in this case is an IRA, put enough of a down payment down so that the bank, in the event they had to take the property back in the event of default, the mortgage is far below what rents in the area are, so it alleviates the risk for the bank.
That's exactly correct. And it's a very safe loan for us as investors, right? Because we're not personally liable to pay that mortgage. If we don't pay it, our credit's unaffected, our other assets are unaffected. And on the flip side of that, it's an incredibly risky loan for the bank because the bank's not taking into account how good Nate or Josh's credit is, how creditworthy they've been over the years. So very few banks offer non-recourse. And that's one of the benefits to working with us is we have decade-long relationships with lenders that offer this financing. So like Nate said, they're looking at the property, the management team, the location, the cash flow it makes. So when you go into buying a property with a loan, you should I feel a lot more secure knowing a bank is putting in more money than me based on the property, not my credit score.
Yeah. And when they say non-recourse, don't get it confused, listeners, that it's not recourse to anything. It just means the bank has recourse to the property and that's it. They can't go after you. They can't go after your IRA's other assets. So it is good. It's safe in that regards. And obviously you just want to make sure the property's got enough income to make the mortgage payment, or you've got some reserves, but it's relatively safe. And it's actually I know a lot of people in the mortgage industry that do both loans, and they tell me all the time, they're like, God, if I could just do an IRA loan all day, that's the only loan I would do because it's less requirements, less underwriting. It's just a very easy, product to sell. So anyways, just want to make sure people were aware that, yeah, you don't need cash all in your IRA to buy these properties.
Absolutely. And it makes the investment easier to get into in the sense that if you're looking at a $300,000 property or $200,000 property, it's roughly about a third down right now. And it has been, when rates were lower, as low as a quarter down. And to that point, when we're talking about the power of leverage, you look at the difference of buying one home versus four, right? And if you buy one home and it grows by 3%, which is a conservative estimate, I would be very disappointed with 3%, but like we'd use that to be conservative. That's $6,000 in growth on your 200,000 invested.
Yeah.
Now, if you spread that out, you're going to look at 24,000 in growth because you own 4 assets for the price of 1, or 18,000 in growth. So when you compare this to something tangible like gold, right? Like you buy $200,000 worth of gold, inflation's 10%, it's worth 220. You can 4x or 3x the amount of real estate you own, depending on the situation, where rates are, and utilizing that leverage to get more assets using less of your own money.
Lindsay, do we have any questions that we want to take right now?
Yeah, we actually had one good one that I wanted to take pause on real quick and do a recap of this, but someone asked us to describe what is a non-recourse loan. So can we go back to the basics on that slide that you had, Josh, and talk about specifically what is a non-recourse loan?
Absolutely. So non-recourse financing is a type of commercial loan where, in the event of default, where you don't pay your mortgage, the lender's repayment is limited only to the securing of the property. The lender cannot pursue the borrower's personal assets or income beyond the collateral, which would be the property. So if you normally buy a conventional house, right, and you put 5% down and you stop paying that mortgage, the bank can come after your income and your other assets and your credit score, right? If you buy a house in your IRA and stop paying it for whatever reason, the bank can only take the property. Now, in our history, that's never happened where someone's lost the property to the bank, but it should give you a lot of peace of mind as an investor that it's a good investment based on the bank's due diligence, specifically on the asset. So whether you're buying it on your own or buying with us, it's a huge, for me, peace of mind item that makes me feel very comfortable that I'm getting into a good asset based on the bank's qualification.
Another question, Josh, and this might be something somebody's thinking about out there. Can somebody say, buy a house all cash with their IRA through SDIRA Wealth, and then they go, you know what? I like that experience. I think I want to buy another one. Will those same lenders allow you to do a cash out, refi some of that equity to buy another house?
Absolutely, they will. We do cash out refis all the time for non-recourse clients. I have clients who bought 5 years ago that have enough equity when they refinance to be able to pull some money out and get more properties.
There you go.
Wow, so many possibilities. There's one more question that I think would be really good to ask. A lot of people on here are actually inquiring about the difference, in the interest rate really between a traditional mortgage and a non-recourse loan. What are you seeing right now? What are the differences?
Well, in general, non-recourse is much riskier for the bank. So they're always going to be higher than a regular rate that's tied to your credit line. But one of the benefits we're able to get is we do such a volume with over 2,000 homes. We're able to acquire better rates than the market for non-recourse. So like typical non-recourse lenders, if you go to them today, it's in the 9 to 10 range. We're able to be in the 7 to 8 range.
I usually tell people this: they're not hard money rates. No offense to hard money lenders, but it's not like a hard money loan. That's very different. And if you think about it, even from the bank's point of view, I'll just push back a little bit on you, Josh, just because for the bank, oftentimes they're asking for a more sizable down payment. So that's the safety net for the bank, is they can ask for 35, 40. I've even seen some non-recourse lenders ask for 50% down based on the property's performance. So it's not that it's risky for the bank. Josh is right. They don't get a FICO score. They can't go after anybody. But as far as the asset their money's tied to, if there's a ton of equity in it, it's not that bad of a deal. So you're not going to see hard money rates. You're not going to see 14, 18% on most non-recourse lenders. You'll see them kind of where in the sweet spot where Josh mentioned, between 7 and 10 from my experience.
Absolutely. And pre-pandemic, we used to be at 5. But rates are higher, and that's more of a challenge. But when you're thinking long term, if you're 10 years from retirement, 15 years, 20 years, that shouldn't matter to you. Yeah. It should just matter that you're getting more assets. And in 10 years, if you had 4 properties today or 1, how much wealthier would you be?
The better number for people to concentrate on is the cash on cash return. with and without the debt. That's your comparison, right? If the debt on the property allows you to buy 3 properties, you got to look at, okay, the debt is just a cost of doing business. The debt's an expense. But if my IRA only has to put in 30% down and I'm getting X amount in rent, I got to look at what's my initial investment compared to what's the income that I'm generating. If my cash on cash return is higher with the debt, by all means, use the debt and buy more property.
Absolutely. And, I have a whole section on goal planning too. And when we're talking about goal planning, if your goal is 10 years out plus, think of any property 10, 15, 20 years ago and tell me it doesn't rent for more today, anywhere,
Exactly.
let alone a growth market. So if you can 3X that, you're going to just improve your return that much more. The whole time the tenants are paying your loans down and you're getting 3 times the appreciation you normally would.
Perfect. Any other questions? Okay. All right. Let's move on.
And then last piece, very crucial piece, is property management. So I would never want to manage one of my own properties. And I actually will talk a little bit about how you can't manage your own property when you're doing it in an IRA. But one of the benefits of the volume we do is we get volume discounts on lending, property management, and we're able to secure discounted rates from property managers. And when our clients are looking in a specific area, we always have a list of vetted options they can interview, a guide to do that. So ultimately, we're here to serve, and we work with many busy professionals that want passive income and don't have the time to do this. First-time investors, their first investment property or property, a lot of times is with us. High income earners that need to reduce their taxes with some of the benefits real estate can provide, investors that want to scale. If you want to get obviously out of the volatility of the stock market, the stress of that, get your 401k into something you actually own, and anyone wanting to retire comfortably. So this will be my first call out because it's very important you get all your questions answered, and whatever questions you have, you ask our team and you bring it to us. So I'm going to drop our booking link for a free 30-minute consultation with our team. And I want to share a quick video from a great client of mine. I believe he's on the webinar, who asked me every question he wanted to and flew out. And I actually got to meet him at one of our projects, which was an absolute pleasure. Nervous, who maybe don't feel comfortable sharing things with us, what advice would you give to them if they were to book a call with Josh or someone on our team here to be their rep?
I would say listen, because you give a hell of a presentation, but if there's anything you don't understand at any point in making a decision on this, all I got to do is give you a call and ask. And either they'll like it or they won't, but it won't be a problem with not knowing. Mm-hmm. Yeah, because a lot of we ask a lot of questions. Well, I'm going to say I ask a lot of questions because I don't know. Yeah, and so that's the thing. If I don't know, I ain't going to sit here and just, oh yeah, man, I got it. Okay, yeah, let's sign. And then, 6 months later, well, damn, Josh, I didn't know about that. Mm-hmm. So that's why I ask all the questions, and anytime I ask, you give me information. When I was flying out here, you send me brochures, you give me information on where to stay and what the accommodations are around me. So I'm just all around comfortable with you guys,
Well, that's awesome to hear. And then we want any client to know that there's no, let's call it, wrong question, right? If you're worried about what happens if X happens, we're gonna know the answer to it, or we can get the answer. 99.9% of the time, we're gonna know it. We've done billions and billions in transactions, been in business for over 24 years. All of us on our team, we not only are account reps and portfolio managers to help clients, but we also invest ourselves, and it's an honor to be your neighbor, That's always cool. It doesn't always happen because we do a lot of, over 2,000 homes a year, so it doesn't always happen we're in the same neighborhood.
Exactly.
But yeah, I'm happy about that. right? And those are the kinds of different clients that we serve here that benefit from having a more passive strategy. It's not a fit for everyone. And when we talk about using this strategy, really it's about what your goal is and why you want to do this. Personally, I don't want to be a burden on my family when I retire. I want to have enough income that outlives me. I want to be able to travel when I retire. My wife and I want to visit every country on the continent throughout retirement. And I want a certain number of passive income, and that's different for every person. And we like to call that the freedom number, your individual freedom number and how much income you need to retire. And through our history, we've done the math, and the average client needs about an extra $10,000 a month to retire comfortably. Now, some people less, some people more. Typically, that comes out to 5 properties paid off, right? So if you invested in 5 homes today, in 20 years, they would pay themselves off early by using the cash flow. That's the average amount of time. And we had a book written by our CEO, the Freedom 5 Formula. So that's a real book. It's available on Amazon. And as a special freebie, we're going to give it away for free today. So I'm dropping that in the chat. You can download it for free, a copy of the Freedom 5 Formula.
Awesome.
Of course, absolutely.
Love free stuff here. So
yeah, no, we believe in free education. We're on the same wavelength with Directed in that sense that we want to provide free education so people can make an educated, empowered decision on what's best for them. So feel free to download this for free. You're all very welcome in the chat. I'm excited for you to read that and check out what this formula works. And I have a very short summary of the phases, the 3 phases to using our strategy to pay homes off and create that financial freedom. So those 3 phases are acquiring properties, utilizing that leverage. Just like Nate mentioned, one of those strategies is harvesting the equity, refinancing, pulling the equity out. Now is an amazing time to use leverage because with high rates, prices are low and more people are renting. So you can buy more homes. And when rates come down and prices go up, you refinance them. And that's phase 1, the most difficult, hardest phase to start with. And you're looking at acquiring properties, utilizing leverage to get the amount of properties you need for your goals. That's where our consultation is about, finding out if we're a fit for you and our model works, and ultimately how many homes you need to retire comfortably. Phase 2 is where we're doing what Nate mentioned, different strategies like refinancing, selling homes that appreciate a lot and moving them into other ones. And Nate, if I sell a paid off home in my IRA, how much tax do I pay when it comes back to my IRA?
Nada, 0. No tax return, doesn't hit your 1040. You can reinvest every penny into another deal. So you get that exponential compounding growth effect.
Perfect. That's what I love to hear. That's one of the huge benefits to using an IRA to buy real estate.
Money grows much, much faster in an account that's not taxed.
And if I buy a house for $200,000 and then I sell it for $1 million in a Roth, how much tax do I pay on that $1 million?
0. You pay no tax on the gains. And if you're above 59.5 and you've had the Roth for 5 years, you can actually even take money out tax-free and penalty-free. So
it sounds illegal.
It should be illegal, but it's the one true way. It actually shouldn't be illegal. I apologize for saying that. Apologize to all our fans out there. But it is one of the true gifts that we've gotten from our government, is the fact that we have these vehicles that allow us to build tax-free wealth. We just weren't told that we can put in cash flowing and appreciating assets that we can leverage to put in these accounts. So I've seen clients of mine, and you probably will say the same thing, Lindsey, over your 13, 14 years, is I've got clients that have 12, 15 properties owned in a Roth IRA. They're off the grid. I mean, they've got tenants that are paying, they've got 12 rent checks coming in monthly to a Roth IRA There's no tax on the rents. And because they're 59.5, they just have a recurring distribution on file from us. And we just send them the rents tax free. It's $20,000 a month, $20,000 check one month, $20,000 check the next month. And meanwhile, here's the craziest part. When we get their fair market value at the end of the year to ask them what their value of their IRA is, guess what? Does it go up or down? It goes up because they're not even touching the principal of the asset, which is the equity in the appreciating house. They're just touching the rents. And it's so funny, Josh, because I had a client earlier today and we were talking about, some different strategies, how to navigate. And it was more about a IRA owned LLC. Should they put some assets in an IRA owned LLC? And they are above retirement age. So they wanted to make sure that they didn't sell the assets that they have with us. And they were like, no, we'll just sell off the assets we have with Fidelity because those are just like buy, hope, and pray. The assets they have with us are like income producing assets that help fund their retirement. So that's their most important assets are the ones that they have with us, all because they finally learned that they can put these real estate assets in an IRA and not just be tied to the stock market and buy, hope, and pray. So yeah, so I love the Roth IRA, but ultimately an IRA just grows much, much faster than your personal money because it's not a taxpayer.
We do have a couple of questions I'd love to throw your way, Josh, if you're up for it.
Absolutely. I was born ready.
All right. So here's one for you from Josette. Josette wants to know, do you need to be an accredited investor to purchase properties through SDIRA Wealth?
You do not. You absolutely do not need to be accredited. It's a real property, new construction that you own. So it doesn't fall under the level of what we call it risk that the government says, like, certain investments, you could lose all your money like that. So they want to make sure you're able to handle that. You have the wealth to handle that. With our strategy, you do not have to be accredited.
Awesome. Thank you. We've got another question from Marcia. I'm going to answer this one quickly. Marcia says, is this only for rental properties? So Marcia, yes, this is specifically for investment properties only. So you cannot use your self-directed IRA to purchase your primary residence. You also cannot purchase a property with your self-directed IRA that you're planning on renting out to a family member potentially. So anyone of lineal ascent or descent cannot rent the property from you. That is something also to be aware of. So yes, it is only for rental properties, not your primary residence.
Yeah, and it could be a flip too. I mean, it doesn't have to be rented per se, but it does have to be an investment. It can't be used for personal use, but it has to be an investment, whether you're flipping it or holding it. I would say if you're using debt, long story short, you're probably going to be better served renting it. There's a lot of different things we won't get into on that. But flipping property, it can be done. Probably not the best strategy for long-term wealth, in my opinion.
I do have a tax related question for you as well, Josh. We can always take this offline. It may be more specific and we might need more additional information, but I know you guys also at SDIRA Wealth, you handle tax advice as well, right?
Well, we do partner with a lot of tax advisors, right?
Awesome.
And tax strategists. So when you're doing obviously real estate in your IRA, you don't get depreciation on your personal tax return. When you're doing it outside, you do. So most clients, myself included, do both. I invest inside my IRA, I max out my contributions every year, and I also invest outside my IRA. So I have properties that give me benefits both ways.
Awesome. Thank you for that. Marcia had another really good question on those along that same line. She said, how do you get depreciation tax benefits on a self-directed IRA investment when the self-directed IRA isn't taxable? This one really only comes into play if you're having any sort of UDFI on the property. So if you are leveraging debt, there could be a tax called UDFI. This is unrelated debt financed income. So that can come into play. And that leads me into the last question that I wanted to throw out there, which somebody specifically said, what about UDFI? That is another great thing to be aware of. It shouldn't necessarily scare you away from doing these investments, but just be aware of it. There are ways to actually completely avoid it as well. For instance, the solo 401k or this Roth solo 401k. The solo 401ks, for whatever reason, the IRS says they don't owe UDFI. So that's one way to avoid it.
Yeah. And Michelle, I think Michelle is on. Michelle, if you can hear me, drop a link to my workshop on buying real estate with and without debt. If you guys want a good webinar that we recorded on that talks about how you break down that tax, and this class will teach you that UDFI is not a bad thing. In fact, it could be your best friend because, again, it's just a cost of doing business. And you want to just be able to analyze whether or not the debt, even though your IRA may have to pay a tax on the debt, whether that increases the cash on cash return of the asset itself. So she'll drop that link in there. Watch that on your guys' free time. But we do a class on that. It's called Buying Real Estate with and Without Debt. Breaks that down for you guys pretty simply.
Guys, UDFI and UBIT, those are such advanced topics when it comes
But
to
I love it.
self-directing. I'm so impressed. We've got so many people in the chat actually mentioning UBIT and UDFI. So very exciting. It looks like a lot of you are pretty experienced in this.
And let me just say this about it real quick. It's not a bad thing, guys. If you think it's bad, somebody just tried to scare you out of doing this. It might have been your advisor at Fidelity. So with this tax, all it means is that your IRA now can use depreciation and expenses to offset a tax. Normally, there's no tax, so there's nothing to offset. As soon as your IRA borrows money, now you can use those offsets that we use, and it's only on a percent of the income to the extent of the debt. So oftentimes, I will just say, most cases that I've seen, the expenses whittle down the income to where the IRA owes almost nothing in tax. The bigger tax you're trying to avoid is the capital gain. Okay, so in a perfect world, if your IRA were to hold a property and it used leverage to buy it, by the time it holds it and then maybe a renter pays off the note, you can essentially pay no capital gains tax if there's no debt on the property by the time you sell it. So there's so many different ways that you can offset the tax, minimize the tax, or eliminate it completely. You just got to look at it. It's a cost of doing business. How much is the tax going to cost me? And does that positively or negatively affect my cash on cash return? And I will tell you, almost 99% of the time, it helps your cash on cash return in a positive way.
Or imagine if you bought a home for $200,000 and in 5 years it's worth $400,000, and you sell that in your IRA and you just made $200,000. Now, imagine you bought 3 of those homes for $200,000 and they're each worth $400,000. Now you made $600,000 and you're going to pay a little bit of UBIT tax on the difference. Which one do you think, which IRA would end up with more money, Nate?
Oh, the one that bought 3 houses versus 1.
Exactly.
Exactly.
So my CPA says we should be thankful for thankful to the government. It's the only time I've ever heard him say that. Mm-hmm. We should be thankful to the government that they allow us to leverage our IRAs and pay a little bit of tax.
That's the key. The tax is not the moral of that story. The moral of the story is the fact that your IRA can leverage bank financing to buy more property.
Absolutely. All right. Well, we've got a few other questions in here. I'll throw one more out and then we'll.
Sure. Yeah.
Okay. Let's see.
Great questions, by the way. Keep them coming.
I know. So I actually am going to go back to UDFI on this. Rob Joseph, this is a great question and a great point. Thank you, Rob. He said, isn't UDFI like 37% and we have to pay that tax yearly, correct?
So, okay. So an IRA is by definition a trust. So if an IRA becomes a taxpayer because we bring on debt, you have to go what's called to the trust and estates tax bracket. So it's similar to our marginal tax bracket, but it goes to the top at 37%, right at about $15,000, give or take. Okay. Now that's everything above $15,000. But I'm going to tell you guys, there's a lot of ways around this. You just want to have a smart CPA to navigate it. The first $1,000 of income isn't even taxed. So they just waive that off the top. Then when you start throwing the expenses on the property, which now you have a mortgage payment, you've got property taxes, you've got some common repairs, you got all these things that you don't normally get to use as an expense. You get to use that and throw that against the rents on the property. By the time you throw the expenses to the rents, your net, because you're only taxed on net, not gross, your net is probably a lot less than $15,000, I would say, on most rental properties. So you're not going to pay 37% unless you have a very big property that's got a lot of income and you've got a lot of debt on there. So again, 37 is the worst case scenario. But here's the thing. On the capital gains piece, again, which is the bigger tax we're trying to avoid, it's not the rent, it's not the net rent, it's the capital gain. As soon as we hold a property in an IRA a year and a day, 37% goes out the window because an IRA can use long-term capital gains. So again, don't get too scared about this UDFI tax because it's not a bad thing. You just have to understand how to navigate it and understand which investments fit best in an IRA. Long-term rentals that have the opportunity to get paid down that you can hold for a year and a day and beyond.
And that comes to the final phase. If you're buying this long term to use the cash flow and pay the debt off,
there you go.
You're going to have it free and clear. And that's the main strategy with the IRA. Doesn't have to be. Strategies shift, right? Home appreciates a lot. Like that example, you're better off selling and going to another area and paying a little bit of UBIT. But this is the phase we want our clients to end in, right? This is the end goal, is having that financial freedom, using this strategy over the long term to create monthly cash flow, principal reduction, where your tenants pay your loan down every month, appreciation, tax benefits. Using the IRA is a huge tax benefit. So is the depreciation. And when people are like, oh, I don't get any depreciation on real estate, so I shouldn't do it in an IRA. I'd rather pay no taxes than less taxes. I don't know about you, but
yeah, there's nothing to depreciate.
Yeah, there's zero. So those are all strategies we help our clients with, from using directed IRA as our preferred custodian to help set up an amazing structure with an amazing customer service team, and using that self-directed account to be able to buy homes. And this is a strategy you can do yourself. You can identify growth markets, you can secure financing, do your inspections, hire property managers, oversee construction, get your own cost segregation studies done.
Sounds like a lot of work.
Way too much work for me. But that hasn't stopped me from doing it because I'm not doing the legwork. That's what our team is for. And I made it read as a point, when using your IRA, it's prohibited to manage it yourself. You can't actively manage it, right? You can't provide a service similar to a conventional loan, right? Nate, you can't provide that type of service. I can't collect rent from my tenant and go turn a light bulb in my house if my IRA owns it. I'm using sweat equity, and that's a prohibited transaction.
Correct. You just have to be careful to how active you are in your retirement assets. General rule of thumb, you want to be at arm's length, which again is where, you know, a company like SDIRA Wealth comes into play, because they're building the house from ground up. You're not building it, right? They're doing a lot of the due diligence. They're looking at the markets. They're managing the property or have access to, you know, managers of the property. So you don't have to do all that. And at the end of the day, honestly, how much time do you really want to spend on the assets owned in your retirement account? As Josh mentioned, you should be looking to invest inside and outside your IRA. And I find that the most successful investors are the ones that have a retirement account that just grows off the sweat equity of somebody else. And then they just know that they can take those distributions when it comes to retirement. And then they focus their energy on the assets that they're buying outside of the IRA, which are putting food on the table, which are feeding their families, right? Focus on those assets and let your IRA just grow off the sweat equity of other people. That's what a lot of clients choose to do.
Absolutely. And with us, the benefit is our experience. We provide those vetted opportunities. We don't go anywhere post-closing. We do quarterly calls with all of our clients because the goal isn't one property. It's however many you need to reach that goal.
Now, how does somebody, if somebody's interested, Josh, how does it work with SDIRA Wealth? Do they join like a mailer? Do you have properties that they kind of say, oh, I like this property since that's my home state? Like, how does that kind of work?
So we have an interview process. So we don't just take on any client, because not everyone's a fit for this. So the first step, I'll drop it in the chat as well, is the book a call, book a free call, get to know us, get to know you. We're always in different markets. If you live in California, we're not going to be there. If you live in New York, we're not going to be there. If you live in Illinois, where I used to live, and that's how I got started in this, is because I couldn't invest there. I didn't have $1 million. We're not going to be there, right? We're going to go to the areas that are growing, affordable. And when we take a client on in the onboarding process, we like to get to know them. We like to get their goals lined up and make sure we're a fit. We want to show them the market in detail, the property options in detail, and then they can make an educated yes or no decision if they want to get started with us.
And I'm assuming just kind of by default, somebody that's interested in learning more about real estate, just by participating in maybe some of the stuff that you guys are doing, they were kind of getting free coaching in a sense. Would I be incorrect in saying that? Is just kind of being able to be a fly on the wall and listen to some of the calls and kind of see how investment goes from A to Z?
Absolutely. I mean, the goal for us is to educate our clients so they're empowered to make a decision to change their life. This is not a small investment. And I saw a Q&A about it. And I'm going to want to end with that as well, because I have one more freebie for everyone. I know we're a little over time, but I want to make sure to get that out, is that the best time to start was yesterday, because it's not about timing the real estate market. It's about having enough time in the real estate market to experience the increased rents, increased appreciation, increased equity from the tenants paying your loan down. So unless you have a DeLorean like you see on the screen and you get it up past 88 miles an hour, the best time is today. And when we're talking about minimum investments, which I saw was one of the questions, it lines up very well with Connect Invest and why we teamed up with Connect Invest to offer another option, not only for our clients, but also for new investors. So typically when using your IRA, you need about 60 to 80,000 to be a down payment, which is obviously a lot of money. With Connect Invest, you can invest in our properties as a lender and get 4 to 5 times what the average savings account is. And the minimum is only 500. So you don't have to start with 500, but you could start with 5,000, 10,000. Personally, when my solo 401k, which doesn't pay UBIT or UDFI, has extra cash, I put it in Connect Invest and I can grow it at 9% instead of it sitting in a checking account balance. So it's a great option. You can do it inside and outside of an IRA. So it's a great way to get to know us, get to know our properties and our team, and get started. And we're giving out a free $50 bonus for anyone who registers for Connect Invest tonight. And awesome. That's an allowable investment, right, in your IRA, Nate?
Oh, yeah, definitely. Lending? Yeah. Oh yeah, that's what I like.
You the hard question.
Oh yeah, yeah. No,
you were at this time.
No, we really appreciate that, Josh. We appreciate the freebies. So and this is all great stuff. And we've touched on some advanced stuff, but I think the moral of the story is, guys, is if you're watching this, just realize your IRA can own so much more than just stocks, bonds, and mutual funds. And the fact that it can own real estate and the benefits that real estate gives us, and the fact that we can leverage other people's money to buy real estate is just something I think we should have learned, 20 years before we actually learned about it. I was mad when I learned about this, and I thought, why didn't I learn about this 10 years ago when I had 17 rentals and I had them all owned personally and I was cutting huge checks to the IRS? I would have loved to start putting some rental property in an IRA that never got taxed. So yeah, I mean, this is stuff that everybody should realize that is at least an opportunity for us, and realize you don't come to Directed IRA for us to tell you what to invest in. These webinars are to just help you gain a better understanding of what can be put in an IRA. So if you've got questions for Josh, I'm sure he's going to have some contact information up there. Are there any questions that we have that we want to address before we close it out?
No, not at this time. Looks like we hit a lot of the big ones. I would just encourage everybody, book a call with us. Yeah. It's free.
Could you pull up our last slide, Angel?
The analysis paralysis of what do I do? Where do I go? I don't have a huge deal that's going to give me a huge return. As Matt Sorensen says, just get on base. Start the process of investing with your self-directed IRA, and we're here to help. So
yeah, we have a call to action slide with a QR code. If anybody has questions about setting up a self-directed IRA, how to get it funded, we've got a QR code that you could scan, or you can just go to directedira.com and click schedule a call. We do have a special promo for anybody that mentions SDIRA Wealth. All you have to do is put on your application, and we're talking any application. Remember, we've got traditional IRAs, we've got Roth IRAs that can be self-directed, SEPs, solo 401ks that pay no UDFI if you put property in there with debt. And then even HSAs can be self-directed. Those are your health savings account. Think about it now. You may have one from your previous employer. You didn't know you can invest it in real estate. You can. And then we even have educational savings accounts you can set up for your kids. Every one of those accounts gets a discount if you put on the application SDIRA Wealth. And by the way, Josh kind of mentioned you might need $60,000, $80,000 to invest in certain real estate offerings or certain real estate investments. We have solutions for you to partner all your accounts together in what we call an IRA-owned LLC. So if you're struggling to figure out, I got $30,000 in my account, my wife has a $20,000 Roth, we're a little bit short on investing. No, there are solutions when you start looking at all the tax-exempt plans you have. We have a solution through our sister company law firm to just set up an LLC owned by all your plans, and the LLC is now the investor. I don't want to get too much in the weeds in that. We've got more education on that. But again, if you have questions of any sort revolving self-directed IRAs, we're the experts. We're the premier service. So just scan that QR code, talk to one of our seasoned IRA account executives that mentioned you saw the SDIRA Wealth webinar.
That's it.
Josh, any final parting words? It was really great having you, man. It was such good content. Any final things you want to mention to the audience here?
I definitely want to share our partnership with Tim Tebow that we finalized a year ago. We are giving back with every property purchase. We donate enough to save a life to his foundation that fights human trafficking. So we're very, very proud of that. I have a quick 1.5 minute video of some clients who purchased and shared their experience. If we have time, I'd be happy to share it. But
sure, fire away.
I understand because we've had some excellent questions here, and I do have a little more time if y'all do as well. I say y'all.
Hang out if you guys want to hang out. Otherwise, thank you so much for joining us today.
Yeah, go ahead and play that video.
I'll play that video, and then y'all tell me what you want me to do.
Been in the stock market for a while, you know, the ups and downs, just kind of doing my own thing. So I've always wanted to do a rental property, and I think my biggest thing has been the turnkey, you know, just hands off. Like I do want to do it as an investment, but I don't want to deal with tenants. I just don't have time for it. So got introduced to Josh, had a good conversation, which just kind of led me on more. And then, you know, obviously researching into the Texas properties. And I think I watched one of his videos too. And, you know, everybody can get hung up on it because I was going to kind of just test one out. And I'm realizing here a big part that I was probably a little wrong on because I have CPAs and stuff for accountants. A huge reason for this was the tax saving.
Like impressed with the ability to find these markets, like which other people can do, right? But like find these markets, locate enough of an opportunity where you guys can do what you do at scale and have like consistent opportunities that someone like myself or even people that I can refer.
You guys already knew a lot of the strategies that needed to be in place, and you were able to send me a lot of information that made it really comfortable for me to make a decision. Things like explaining to me about, you know, hospitals that were in the area, universities, the major corporations that were going to be moving, and how the properties actually, how they were being built, and a lot of the things that you guys were putting in place in order to make this a good investment. And the fact that you have a whole team working with the investors and working with you to make sure that the progress and all the things that we need will be in place. So I'm really excited about that.
Okay. Awesome, Josh. Well, here's what we're going to do, guys. We're going to pull up the QR code. There were some people that said they wanted to scan that and get started with their self-directed IRA journey. So just scan that. That'll take you right to our book a call page. You can select a specific rep if you want. or you can just say, I need somebody to call me on this day at this time. So schedule a call. Doesn't cost you anything. You can ask all the questions because everybody's going to have a different, point of life and different types of accounts. So make sure you talk to one of our seasoned IRA account executives. And then Josh, how do they get in contact with you? If they have more questions for you or SDIRA Wealth, what's the best way to contact you?
Best way is to book a call with us. So you
Okay.
have access to our team. You can book a call directly on that link for a free 30-minute consultation so we can answer all your questions, make sure this is the right fit for you.
Oh, good. I see it in the chat. Thank you, Josh.
Absolutely. Before we go there, and I'll go ahead and drop the other two as well.
And do you have one that you can show, Josh, for the recording because they won't see the chat? Is there one that you can actually show or just give out as like a website URL or something? Okay.
I've got a QR code right here. Actually, if I can share this,
that'd be perfect.
Let's go through. We already saw the clients, and now you got a QR code directly to our website.
There you
to be able
go.
to book a call.
Okay. Well, scan that if you want to get a hold of Josh or SDIRA Wealth. And, we really appreciate what you guys do for self-directed IRA investors out there, Josh. Really appreciate your time. Josh is going to be at the Alt Asset Summit. I'm putting him on the spot. So just as a reminder, guys, we do have early bird pricing for that. So go to altassetsummit.com if you want to get $100 off any ticket. That lasts until June 16th. So jump on that and hope you guys join us for our next Directed IRA webinar. My name is Nate Hare for Lindsey Mursi. It was great having you guys. We'll see you on the next one.
Thanks, guys.
Thank you, Nate. Thank Lindsey. And October, it's an amazing time to be in Arizona. I will say that.
It's the only time to be in there.
Thanks, Josh. Thank you, everybody.
Thanks, everyone.